Hey everybody, hope you're all well. Welcome to another episode of EGIL.TRADE, brought to you by the Let's Talk Crypto podcast and proudly sponsored by CryptoFish.com. As you can see behind me, we've got a sea of green here. It's only because we've had a massive dump over the last 24 hours or let's say 36 hours. We came down from a high of about 10,400 all the way down to about 9,180 odd. Over a $1,000 drop. Wow, some people must have got really hurt. The liquidation engines were definitely set on fire. Anyway, sorry for those of you who got burnt, but at the end of the day, that's trading. And I hope that some of you got hedged, and I hope that some of you were short and made a lot of money. This is not trading advice. This is not investment advice. Please don't take any of this as trading or investment advice, and you shouldn't take that from any YouTuber for that matter. Right, moving on. We are proudly sponsored by the CryptoFish.com platform, an easy to use non-custodial platform. You can buy Bitcoin or your favorite top cryptocurrencies using euros, US dollars, and your local currency using debit card, credit card, ACH, SEPA, UK bank transfer, Wire in the US, Poly in Australia, and Ideal Payments in the Netherlands. We also have an absolutely free learning section with Bitcoin, blockchain, Crypto Block 101, a Cryptopedia section, video learning portal, and our crypto podcast section. Also, if you're an affiliate, you can earn money by referring people here to buy Bitcoin. We have competitive rates, and yeah, it's really easy and simple to use, non-custodial, which means that we do not hold your private keys. Okay, let's jump into the charts. What do I have up here? I've got the monthly chart. Not much has changed. Why? Because we're still in the beginning of the month. We've had a closure, but I just want to draw some attention to this. Our last monthly close was extremely bullish to me. We've closed higher than the swing high over here. Now, a month is a long time, but this particular price action on a monthly time scale leaves me leaning towards us going up and challenging the 10,760 area sometime during this month. I would like to see it before the end of this month, and we'll judge things how they react at the time. But looking just purely at the monthly time frame, a challenge to the 10,700 to 11,000 area looks like it's on the cards more than ever. So let's go down to lower time frames, weekly basis. Of course, I forgot to mention on the monthly basis, we're living healthily above all moving averages. Most of them are pointing up, so that's bullish. Weekly time frame, we're about to have a very bullish cross of the 10 SMA across the 21 EMA. We're well and far away above the 200 EMA and SMA. We're above all moving averages here. This looks incredibly good. Although the current posture of this candle is not great, it looks a bit like a shooting star. This candle is open. It has 4 days and 7 hours to go. So let's not be misled by that. However, the elephant in the room, we still have not closed above the swing high at 10,000, let's call it 200 odd, on a weekly basis. If we do, we'll have the first etchings of an uptrend. That is, we'll have a higher high, and the only thing we would need to confirm an actual uptrend is a higher low. That would be very exciting because we haven't had that for a very, very long time. The last time we had that was over here back in 2019, and of course before then it was in 2017. So as you can see, if you zoom out on the macro scale, when we have lower highs and lower lows on a weekly basis, it is very obviously a downtrend, and higher highs and higher lows, it's very obviously an uptrend. And right now, although we've had this big up movement on the weekly basis, we've had a pullback. We need to now set in a higher high before we can get extremely bullish. Well, at least I will. If we can close anything above this sort of 10,002 area here on a weekly basis, I will become very, very bullish. But as you can hear, I am bullish anyway, because I think we're going to do it very, very, very soon. So let's have a look at the 3-day. Again, that's not a very nice looking candle, but that's not closed. All we've done is come back down. Basically, you could almost say we've tested the 21 EMA, but I would say we've tested the 10 SMA there. We still are looking at closing a higher high above the swing high over here. Let's have a look at the RSI. We do have some bearish divergence. Now, that is something to watch. We do have a swing high here. We do have a swing high there. Remember, we have to look at a closing basis, close, lower highs on RSI, lower highs, yes, and higher highs on price action. That is basically the definition of a bearish divergence setup. So that is something to watch, and maybe we'll get back a test to the 21 here, or a major EMA as far as the 8,300. But I think if you look at the 21 EMA, it's sitting at 8.7, and a critical area. If I throw in my drawing tools, I don't know how relevant it'll be here. A critical area that we've been talking about is the 85 to 86 area. And look at the 21 EMA on the 3-day. It's actually sitting at 8,800 right now. So that area over there is critical. And what else do we have there? If I go back down to the daily time frame, is you'll see that in that same area, if I just zoom in a little bit, we have this this rising trend line that formed part of our triangle. So there it is there. You got one low over there, you got a higher low. Perhaps we come back down and test the 88 area here, and that would be a great area to buy. This I've got confluence with our stochastics on the daily. You'll see it's actually hit that trend line I drew a few days ago. There we go, and we've crossed. So if we do confirm and continue with a little bit of continuation down here, I'd be looking for a buy in this area over here. You'll see I've drawn this box here. This is where I'm looking at. It meets up with this rising trend line, plus it meets in with our edge of the bearish control zone, which I like to see us reject. So if we can hit around this area here, and if we see a hint of a cross, that's a definite buy zone for me. Not trading advice, not investment advice, take it as you will. Now let's have a look at the 12-hour time frame. On the 12-hour time frame, for those of you that missed it, we did get a cross, and as usual, the cheat code of Bitcoin trading is the crosses on the 12-hour, as per Eric Crown. And there are some people I know that did take a short here, and they've done very well. So there it goes again. If you did it, fantastic. We are living above all EMAs here, but we have lost the 10 SMA. What I would like to see, if we want to be more short-term bullish, is for us to go a bit sideways here and then do one of those BART patterns back up again and then carry on to new highs. However, I'm not so sure in the short term that we're going to be doing that, but medium to long term, I do think that we've got higher to go. On the short term, the 4-hour stochastics have crossed up, but just like on the daily, we've got a trend line here to compete with. Perhaps we'll be meeting up with that, and because the nature of it, a daily we has 6 periods of the 4-hour in it, so maybe we do have a little bit of upside here, meet back with it before actually springing up and going back through again. Right, let's have a look at the hourly, yes. A little bit of sideways action here. Let's have a look at our oscillators. Cross down, RSI bouncing off the exponential. Yeah, not much to say about the hourly. I don't normally look at short time frames like this, but right now just trying to get some hints. Let's have a look again at the 4-hour time frame. Is holding the 55, has lost the 21 EMA. We are below this order block over here. I think that is going to hold us down while we reaccumulate. And I wouldn't be surprised if we have another stab down, another test. And the 4-hour 200 EMA is probably going to meet up with this horizontal here, about 9,100 to 9,200 pretty soon. Maybe we have another stab down back through this order block down here. Might be a good buy before we head on back up. So I'd be looking at the daily stochastics, the daily sort of price action, and the 12-hour price action. Combined with these EMAs over here, the 200 SMA and the 200 EMA, I'd like to see price action come back down and hold. Somewhere in this order block over here, which I'll just quickly draw. I would say somewhere in this area there. And I'd like to pick a buy there. Because if I'm wrong, well, I'll know very quickly, and we'll probably lose the 200 EMA. And if that's the case, then I think that we're probably going to head on south. 86 will be tested, and if that breaks, I don't want to see that break. If it does break, then I think we're going much lower. I don't think the 8,000 to 8,200 is going to hold it. I think we're coming right back down to what I've been saying for a while, the yearly open. Bitcoin loves tagging yearly opens. And if you just have a look here, back onto the monthly, it's something that I've got marked out is the yearly opens. So at the bottom, you'll see this line over here is the 2017. It's 966. 2019 is 3,693. We've basically come back and tagged that without anybody expecting it, all the way down from 9,500 all the way back down to 3,693. I'd like to see us come back and tag the year open of 2020. That would be the absolute gem of a buy. Now, if we don't get it, doesn't mean I won't be buying along the way as we hit levels and expecting higher prices, because I am bullish on this current candle closure on the last monthly, because we've closed above the swing high. So, you know, that's the thing about trading. You know, if it goes this way, then I'm going to position myself in a way that I want to take advantage of the upside. I won't be buying into the FOMO. Well, at least that's what I'm going to try and not do, because we're not perfect. But I'm going to be looking for levels to buy back into, dips to buy back into going up. However, if levels do break, then I'll look lower to previous supports to see where there's been interest in terms of past price action, and I'll be buying along those lines, along with a combination of EMAs and other indicators. Now, it doesn't mean that I wouldn't like price action to come back down to the 2020 open. I absolutely would love us to come back down, test the monthly EMA, 21 EMA, and have a wick down somewhere in the region of the year open of 2020, which puts us at 7,160. What an absolutely gorgeous buy that would be. And then we march on back up. Equally though, I'd be happy for us to go up from here. That's trading. All right, guys, let's have a look at the crypto fear and greed index. We're ticking at a 48. It's in the neutral zone. As you can see, right in the middle, we've had fear last month, fear last week, greed yesterday, got absolutely smashed down, and now we're back onto the negative side of it, but still pretty neutral as far as I'm concerned. Why is this useful? If it ticks into the more sort of extreme reads, then you can kind of expect a counter move in price action. So more fear, maybe you'll get a pump. More greed, maybe you'll get a dump. Maybe. It's not set in stone. It can just sort of add to the other indicators and give you a little bit of confidence in what your ideas might be. And as you can see on this indicator, you can see that you've got the past action here. You can see 7 days, 1 month, 3 months, and 1 year. So you can compare all the different sort of analytics of it. Guys, I hope you've enjoyed this episode. I hope to see you again tomorrow. And wherever you are out there, stay safe. And remember, this is not trading advice, and it's not investment advice. Have a great day, evening, or morning, wherever you are.